So we have calculated total of non-current assets, okay, and now and then we have calculated current assets. Total is 52,300. So let's calculate total asset, okay, asset value. So which is 97,200 plus 52,300. So when we add up 97,200, okay, 97,200 plus 52,300, the value you get is 149,500. So the value you're going to get is 149,500. So that's the total asset value. Now let's calculate, it has to get balanced with capital and liabilities, okay. So total capital and profit for the year. So and less drawings we have to do. Let's do that. So the capital is going to be around 100,000, okay, capital. And then you have profit for the year, which we have already calculated. It is 43,600 less drawings. The drawings were around, the drawings, okay, were around 20,000. So let's do this calculation. So 100,000, okay, 100,000 plus 43,600 minus 20,000, that's going to be 123,600. Next you have, okay, 123,600. Next you have the liabilities, okay. Let's calculate the current liabilities. So the current liabilities, trade payables were around 21,800. So trade payables, and then, okay, that's one of them. And do you have anything else? You have some accrued expenses, okay, which had become other payables. Okay, it had become 4,100. So let's write those two. So the trade payables were around 21,800 and then 4,100. So when I add up these two, it's going to be 25,900. Now let's add up the total capital and this one. Okay, so let's add up these two. So 123,600 plus 25,600, that's going to be 123,600 plus 25,900, that is 149,500. As you can see, the total assets and liabilities have got balanced. So this value is going to be, this is nothing but, it's called total capital and liabilities. So this is total capital and liabilities, okay, which was 149,500, and we had the total assets, okay, the total assets. So it has got matched.